The broadcast is now starting. All attendees are in listen-only mode.
Oh, there you go. I'm unmuted now. Sorry. All right, how's everyone doing? You guys can hear me okay now? Okay, so we're gonna look through the positions held by the institutions. So we're gonna start. We went into some detail yesterday. Wow, what a session we had yesterday. For those that are in here now that were students, you know, we had a great session with them yesterday. We went into much detail looking at some of the information that we collected from the CFTC report. We were looking at the data, and we also did a level 1 class, so we were taking a look at some of the homework that was submitted from students, examining supply and demand, the trend lines and all that good stuff. So we got a lot out of it. Incredible. Talking about structures, breaking out of structures. Here's a new software. I haven't used this one yet, but I guess it works similar to the old one. So we're taking a look here, and we have gold commercials. Okay. Where did my pen disappear to? There it is. All right. We've got that, and we've also got this pen too here. So we've got gold, and we're looking at. So we've got gold, and we're looking at these positions here. And what I can see is that lately there hasn't been anything really important, okay? What I can tell you is that when we look at these positions, we can see that they've been slowly increasing their longs, all right? And this was happening right throughout here. So we can see eventually price did rally up. So the aggressiveness in long positions is being represented in here, okay? But, you know, like what we were talking about yesterday, if I take a look at gold, okay, and we take a look at price action, okay, you can see it on, we can bring up the daily chart, okay. Here's what we're looking at. Now, let's take a look at what your typical investor, typical trader would be looking at. This is what your typical trader would be looking at, okay? So price action looks like this. That's interesting. Now it's not working. What's up with that, Jason? You see that? It's not working. Pen, not working. So is my life lately since I've upgraded to Windows 10. Nothing works anymore. So this is what traders are looking at, okay? They're seeing this, right? And I'm sure, you know, some of them are drawing trend lines down here, and this was a descending channel, and then a false breakout from the descending channel, that type of stuff. That's what they're looking at, okay? But the reality, the reality of this situation is that currently we have a major area of buying from the banks here, okay? This is what's going on here. The reason why we had this decline in price was because price was retracing down to an area of buying, right? So this area here is an area of buying, and you know, we're waiting to see if the institutions are going to use this area of buying to start pushing price upwards. That's what is taking place. All right. So if they started to take price upwards, but when we examined this structure right here, we knew it was very weak. Okay. We knew that it was very weak. So, you know, when your typical trader was looking at a breakout from this descending channel here, what we were looking at was the fact that this structure here was very weak. All right. So it's been that, yeah, I have EpiPen, which is this one, but it's not working. It was working until I started the live stream, and now it's not working. So this structure to the upside was very weak, and then price descended and is contacting again this area of demand. Okay, so what we're waiting to see is whether or not the banks are going to use this area for major buying. And if they do, then we'll start to see structures being built to the upside. But so far, that hasn't taken place. Okay. Oh, look at that. Now it's there. How did that happen? How did that happen? No idea. No idea. There we go. Okay, so far that hasn't happened. So if we take a look at the positions again, see, let's put back our drawings. So this is what it looks like without doing analysis of what the institutions are doing with their positions. And this is doing the analysis of what the institutions are doing with their positions. Okay, we've labeled a bunch of areas of supply here. These are institutional areas of supply that we expect to see reactions from. And these work as, like, if you want to understand why we have these things drawn in, is because these areas here, okay, you see that? You see how price came into that area there and respected it right here, right there. You see that? So that was an institutional area of supply. All right. That was an area that their algorithms were programmed to sell. So when price rallied up into that area, that's what happened. They sold and they dropped price lower. As they dropped price lower, they created another area of selling right here. And as you can see so far, with all these rallies up, we have not contacted that area of selling. All right. So when price does eventually go up there, if it does go up there and contacts this area, then what we're looking at is whether or not this area is going to be held by the institutions. Okay, are the algorithms going to hold this area and come in and bring in sell orders to push price lower, or is this area going to be removed? Okay, because if this area is removed, then you can imagine what's going to come next. Okay, it removes this area and it will head up to the next area. Okay, but already this area has been contacted. Right? So what's happening here is not going to be as strong as when price first contacted it here. All right. So now when it makes a second contact, we expect this area to get taken out. Right? Like that. Price head higher. Okay. So so that's what's going on right now, and we're just waiting to see if they're going to be bringing in some buying. They have, you know, they did bring some buying in here, but you know, They start to take profits a little bit. Now they're starting to pile into longs again. But so far, we haven't seen anything significant on this chart to suggest that there's going to be a bigger push higher, okay? This area here is the first thing we need to see removed. If that doesn't get removed, there's nothing to see here, okay? There's nothing to see here. Yes, there's some buying, but that buying isn't significant enough for me to be excited, all right? We take a look at oil. Oil has been a great one, all right? It's been a good one. It's been a big mover. We called the move from here, from that area of demand, all the way up. In fact, we called the move up all the way from down here at $20. Okay, but once they created this area of buying here, price retraced down to it, contacted the area of buying, and took off. And so now we have an upward trend on the weekly chart, which is extremely strong, and we expect this to continue to the upside. And you know, we got the slight retracement down. We're watching to see if they're going to bring it down all the way to this area of buying here. Okay, this is the last area the banks were buying. And so if we examine their positions here, I mean, that's pretty decent, right? Look at that. Very, very cooled off their short positions, okay? That's why the cells are blue. When the cells are blue, that means they're cooled off. What does that mean? That means they're not focusing on short positions at this time. And that's important to know, because if they're not focusing on short positions, then that means they could be possibly focusing on something else. And in this case, we can see that they are focusing on long positions, all right? Because the coloration of these cells are red, that means they are more prominent than what they typically have been, which is a very good sign. Okay, so that's what we're watching. Everything's bullish here. The long percentage, 81%, that's great. Coloration of the cells for long and short is green, which is very bullish. So there's no reason to suspect that price isn't going to go up even higher, okay? So we have a very nice structure on the weekly chart to the upside. And then when we take a look at this daily chart, okay, we had a decent structure here. It wasn't the greatest, but we had something decent. Look at this. Okay. Shift to draw. That's nice. That's good. So we had a really nice trend line here. And then take a look at what's happening right here. Okay. Look at what's happening up here. That trend line is under attack. In fact, it's no longer valuable for us, this trend line, because of what's happening here, right? So that basically means the daily structure is no longer strong, which means retracements lower can easily take place. Will they happen? We don't know, but it's very likely going to happen, okay? So when we look at the daily chart, this is what we got. So we know that we have our area of institutional buying located down here. And we know that recently the institutions price contacted this institutional area of selling, okay? And what took place? You know, we take a look at the positions here. We see 564, 565, 550, 548. Profit taking on long positions. Now, what is it that I was posting last week about if you're long, be careful. We're hitting an institutional area of supply. All right, so take that into consideration. You think the banks took it into consideration? Yes, they use that area for profit taking on long positions, which is why I was saying, okay, if you're long, take that into consideration. We're hitting a very nice area of supply. All right, so this supply came into play, and we see the push to the downside. So now the structure on the daily chart is under attack and has been removed to a certain degree. And for that reason, we now expect price to roll over and push a little bit further. Okay. And then at that point, we will be looking for the long signals because there's going to be long chart signals on this. All right. There's definitely going to be. It's just about being patient and waiting for them to present themselves. But there will be long chart signals. So everything's looking good for oil. And then we have the dollar. The dollar, we see that longs are very, very red. Okay, they could be stronger, but they're red, which means they're aggressive. And this changed since September 14. September 14 was contracts expirations. So 34,000, 36, 45, all of a sudden we're next to 50,000. And if you take a look at the 13 period average, okay, their average size is 40,000. We're at 45. So they're well above their average size. And shorts, they're well below. So cooled off, shorts are cooled off, longs are aggressive. So what's going to happen next? Well, you can see that long percentage is 71%, or 85%, 81%, very aggressive. Okay, we got coloration of the cells green, so they're aggressive, and we just contacted a weekly area of demand. All right, but as I was mentioning yesterday to students, this chart is not reliable, and we talked about it in detail, so we got to be very careful with this chart. All right, I'd like to see a better chart, but it is what it is, so we're going to have to wait for the signals because there's no signals at this point to make any type of trades. Okay, and we were examining this 4-hour chart in some detail and looking at the structure of what is taking place as well. 4-hour chart is telling us a lot of what to expect. All right, so now I want to move over to the next picture, and it's not. Oh, there it is, finally. Aussie longs are very cooled off, shorts are aggressive. All right. So we know that the move up off of demand was fueled by profit taking on shorts, and that's it, not an accumulation. So very likely it's going to turn over and head lower if the rest of the markets are moving in that direction as well, like the euro, the pound, and the Kiwi. USCAD, we had a short signal on this one, worked out extremely well, and target 1 was hit. This is one of those examples of how the charts tell you everything you need to know. Okay? Charts tell you everything you need to know. You just got to know what to look for. So example, we had a chart signal to go short here. We had our target here, and we had a target a little bit lower, okay? But we don't hold our positions blindly and just expect our targets to be hit. We anticipate that they're going to be hit, but we also watch for the chart signals to exit the trade should they happen. And it happened right here. So target 1 was here, and second portion of position was to get out here. Because at that point, the chart was signaling that momentum was going to shift up. And look what it's been ever since, okay? Institutional area of demand was created here, and then the institutions used this demand to fuel a move to the upside. So we are suspecting that it's very likely we're going to get more upside. So we are watching for that. And when we take a look at the positions held by the banks, we're not really seeing anything strong. I mean, they took profits on long positions. Shorts went from cooled off to aggressive, after this drop. And we take a look at the long and short percentage, and we're seeing that they were bullish. Now it's more bearish. It's a back and forth. Bearish, look at the net positions. Bearish to bullish, now a tinge of bearishness again. Okay, so there's nothing solid, there's nothing that's holding. So let's just wait off for a little bit. I got a question here. Let's see, why do you not focus on the commercials? Well, we talked about this several times why we don't focus on commercials, because the commercials are doing the opposite of what you want to do. Okay, the commercials are hedging positions. They're not going short something because they think it's going to drop. They're doing the opposite of what they think. All right, so you don't want to do the opposite of what they think. You want to go along with the non-commercials, because non-commercials are the ones that, if they're going long euros because they think the euro is going to rally. If they go short oil, it's because they think oil is going to drop. So that's why we follow them, because they are the ones that are dictating what's going to happen with price. Okay, they are the ones that are moving the markets. They are the ones. So, and if you track and trace these positions that these institutions are using, you'll come to realize that they are moving the markets. What they do is bringing in the force that moves the markets. Okay. How do you provide training for complete beginners? Well, you have to go to our website, whiteoakfx.com, and read what's there. And there's lots of information that you can find about how you can learn. One of the things, we have a free resource. You can go to the student portal. Just click on the White Oak University logo here in the top left-hand corner. Click on what you need to know, right? And the learning process. And that will provide you a bunch of videos here that you can watch that will tell you about how you learn what it is that we have to teach here at the school, about locating institutional supply and demand, okay? Locating the trend lines. Eventually, you're going to learn about finding trends, locating the trends that the banks are creating, okay? How to locate turning points in price, how to enter into trades, how to find your stop and stop locations and target locations, and all that good stuff. So it's all there. All right, we teach you everything you need to know to trade the markets safely, to know when to sit out. I mean, one of the things that we were talking about yesterday was the importance of knowing when not to trade. Okay, knowing when not to trade, because a lot of people trade when they shouldn't be trading and they lose money all the time. So like right now is not the best time to trade USCAD. Yes, we do suspect that price will continue upwards in its momentum. That is what we are suspecting, okay? But if you wanted to get into a long trade on that on a smaller time frame, it would have had to be from down here, okay? Because that's the institutional buying area here, okay? There's always a storyline taking place, and you got to follow the storyline. This is what we always talk about here at the school. And if you can follow the storyline, then you will just know what to look for. Just became a member. I know, Ben, welcome. Welcome, Ben. Okay, so let's get to the next one. US Swiss. So this one is just sitting in between zones. So again, knowing when to trade and when not to trade. Here's the situation, okay? We have institutional selling zone here. We have institutional buying zone here. You know what we call this when price is here? Okay, that's ranging, all right? Ranging is the worst time to trade. Do you know why? Because there's no rhyme or reason for what they do with price. Price can come up a little bit and then it can turn down. It can go all the way down, then it can turn up. And then it can go back down, then it can go all the way up. There's no rhyme or reason for what price is doing. So we do not want to trade something like this, all right? What we want is a clear evidence of what is taking place. So if the institutions remove their selling zone, what do you think they're going to do with price? Shoot it up. If they remove their buying zone, what do you think they're going to do? Shoot it down. So all we do is we sit back and wait for them to make one of those decisions. It's really that simple. They either remove their selling area, and then we look for areas of buying from them that they create, and then we buy alongside with them. Or we go the opposite way if they take out demand. That's all it comes down to. So that hasn't happened yet when you take a look at the chart. So we just wait. And everybody else can make their own trading decisions. We don't care. We'll let them do whatever they want to do. We're not going to engage in the market when it doesn't need to be engaged. So let's take a look here. US Swiss, let's see what their institutions are. Let's see what the retail traders are doing. Let me see. My FX book's not working so well. I have it filtered, and yet it's listing me all of them. Look at that. I have it filtered to only give me a certain amount, and yet it lists them all. There we go. US Swiss, okay? So take a look at that. Most traders are long right now. Okay. Oops. Most traders are long. And why are they long? Any specific reason why they should be long right now? I mean, there's no good reason why they should be long, right? What I can tell you is that recently price just contacted an area of supply. So if there's any type of force that's in play right now, it's more to the downside than it is any other direction. Okay. So, and they're buying. There's no reason why they should be buying right now. Absolutely no reason. Remember what happened with the dollar? You know, well, the students know what we were talking about with the dollar. Okay. We were looking at the dollar here, and we were looking at this structure. All right. There was potential for price to continue higher here. Okay. There was potential, but that potential died down. Okay. Because we know what the banks, what they create on the charts. We know the structures that they form on the charts when they're about to do something. We know what it looks like, because that's what we do in our classroom sessions each and every week, is we examine the history of what they've done on the charts, every detail, what they did, how they did it, why they did it. We talk about the logic and the reasoning behind why they do what they do, which gives us an understanding of what it is they do and why they do it. So when we look at the markets and we look at a chart like this, we can clearly see they're not pushing price higher. Okay, they're not doing that. But retail traders are long. So what are retail traders seeing in the markets that are causing them to go long? I have no idea. All I know is that my money is safe because I'm not investing in this chart long. Okay. I know exactly what the signal is. And until that signal takes place, there's no trading decision. There's a lot of buzz going on about SMC smart money concepts. Is it worth learning? Well, what do they mean by smart money concepts? Like what we're talking about? Following the big banks? Is that what they're talking about? Yeah, there's buzzwords, smart money concepts, and teaching what the banks are doing. I haven't seen anything that's decent. Okay, because they're not talking about the reality of the market. They're not talking about the structures that the banks create. They're not talking about the trends. They're not talking about how the media is used to facilitate the moves on the charts. They're not talking about that stuff. I mean, some talk a little bit about media manipulation, but then they talk about order flow. I've seen all that stuff, but I mean, that's nothing in comparison to what we're doing here. My opinion and the opinion of many, many hundreds of students that have joined many other services, and they say that there's nothing in comparison to what we're doing here. Nothing compares to it. I have not seen. Every once in a while, I go searching online to see what people are talking about and what education is out there. And I'm sorry, there's just nothing that comes in comparison to what we're doing. If you find something, let me know, and I'd be happy to take a look at it, but I have not seen anything. All right, so Euro US dollar. So what are we seeing in terms of their positions? Well, let's zoom in here and take a look. So we had contracts expiring down here, September 14. So let's examine what they did since then. They had longs at 186, and it's 191 now. So they increased longs a little bit. We look at shorts, what do we see? 158, and they increased them to 220. So they were interested in increasing shorts, but then lately they've been profit taking on those short positions, okay? That kind of makes sense because when we take a look at what is happening on the charts, we can see that, let's just go here. We can see that price rallied up into an institutional area of selling, right? After that, they came in with their selling and it pushed price lower. Okay. Now, this is one of the things that we were talking about in yesterday's session, level 1 session, right? So when we were examining this chart, this weekly chart here, we could tell that this structure that was being created here, we have to be able to determine what is this structure, why is it being created, and is it valuable to us, okay? And so based on what we know to be true about the markets and how the institutions create structures in the markets and the context that they are in, we knew that if we had to rate this structure from, 1 out of 10, 1 being really poor and 10 being very good, we would rate this structure probably a 4 out of 10, okay? That's very poor. This structure being rated a 4 out of 10 is extremely poor, which means that the likelihood of price continuing down at this point is not very high, okay? And I say at this point. And I get these messages from traders every once in a while, and I completely understand, why I get these messages. It's difficult for people to understand when you've been trading using other methodologies, okay? The concepts and principles that you are going to hear about here at the school are very different, okay, than anything you've ever heard before. We talk about things that you've never heard about, and we look at the charts in ways that nobody else is looking at them, okay? So it's going to be a lot of new concepts, going to be a lot of principles that you've never seen, and there's going to be a whole new way of thinking about things, right? Because when we're looking at these charts, there are times when the market is extremely predictable, okay? It's clear as day what is happening. There's very solid trends, very important zones come into play, and it's pretty much laid out for you what the institutions are doing, all right? Everything's downtrending, areas of selling are coming into play, and you know that price is going to go drop. You know it's going to drop. But there's times where things are not clear. When things are not clear, what we need is to sit back and watch the banks play out price and show us what they're going to do. So in this circumstance, that's what we're waiting for. And we talked about this in some great detail yesterday. And if you're a new student, you got to go. Let me show you where that's located, okay? You got to take a look here. You go into the classroom sessions here on the student portal, click on level 1, and it should take you exactly to the class that we just started, all right? US dollar, Japanese yen, historical daily chart, part 2. This is part 2, all right? And if you scroll down, here's the class that we did. This is the one, all right? Right here. This is the one that we did. You just click on the play button. It was 2 hours and 21 minutes, all right? It was long. Yeah, it definitely was long, but so full of information. So full of information. You're going to want to watch that session, okay? So in that session, we were talking about the structures and so forth. And right now, if we wanted to take shorts, which is what we were watching for, we need signals to be presented, all right? And if this structure to the downside on the weekly chart was well formed, then we would have already had a signal to go short. But when there's improper structures, the signals become invalid, which means we need additional signals to be created, right? So that's what we're watching for right now, is for those additional signals to be created to alert us that it's time to get in short again. So we look at the positions here. They're taking profits on those short positions. This is not what we would want to hear, but you see how interesting it was, right? we're looking at the chart, and what was the chart telling us? That they're probably, most likely, not going to drop price, right? That's what we saw. And how interesting is it that we look here and we now see that they're taking profits on short positions? Very interesting, right? We look at what retail traders are doing. Somebody was mentioning that they were mostly short. It looks like that they're still a little bit short. They probably closed off those positions since the big rally to the upside. But again, you know, the chart was telling us to beware. There was no signal to go short. And then when we look at the data, we can see exactly why there was no signal to go short, because they were profit taking on short positions. So this is the perfect example of what we know to be true. You know, when we see a lack of proper structure indicating to us that they are going to push price lower, that's because they are not creating the formations that they would create if they were to push price lower. And why was that happening? Because they were profit taking on short positions. That's why. All right. So it's incredible to see how that works like that. And, you know, it might be hard to understand when I'm talking about these concepts, but, you know, if you follow along with us long enough, you'll start to see what we're talking about. Okay, if you become a student, come to the classroom sessions, you'll hear me go into much more detail explaining all of this stuff to you. Pound US dollar, we see a little bit of bullishness there, increasing their long positions and taking profits on some of their short positions, but not much more to see there. US dollar Japanese yen, I'm interested in this one. Okay, I'm interested in this chart. I like it. I like what I see here. Okay. So on this chart, we have a nice structure on the weekly chart being formed to the upside. We had supply come into play, which is now putting pressure on price and dropping it. But I think that this one is setting up for a bigger move to the upside. When we take a look at the positions, you know, to support what we're seeing on the chart, what would we want to see? An increase in long positions. And that's exactly what we see. All right. In fact, since contract expirations, look at what the banks have been doing. They had to exit out of contracts and get into new ones, and look what they've been focusing on, accumulating long positions. How wonderful. Okay. And we look at short positions, they're not doing anything with short positions. Short positions have been cooled off this whole time. Okay. Look at the long percentage, 86%. That's big, right? And their max size for long positions is 237,000. We're only at 127. So there's still a lot more room for price to continue higher should it want to. So we're watching this one. It's very interesting. We think that over time it's going to continue higher. So we are waiting for the chart signals to be produced. And lastly, we got the Kiwi. We see that they increased their long positions from 24,000 to 27,000. And shorts are not doing much. They're still cooled off. Okay, but the thing is, when you look at the Kiwi, there's not much going on here. It's in the middle of the ocean. We don't have any major areas of buying coming into play. We have one here on the daily chart, but this isn't significant enough to really propel price with any very sustainable momentum. So we're watching this chart to see what the institutions are going to do, but we're not really interested in trading this one as it is right now. All right, that's the Kiwi. Any questions in regards to what we just covered there? Yeah, there's a lot of buzz about going on smart money concepts. Yeah, be careful with that, because you get a lot of people who, you know, they hear these buzzwords and they just want to jump on the bandwagon. So they try to create content built around those concepts. I've been trading like this since I first started trading. I've been committed to this type of trading for, you know, almost 10 years now. All right. This is all I've been doing, is focusing on learning how the banks move the markets, and spending countless amount of hours examining the bank's positions and looking at the supply and demand dynamics on the charts and studying historical charts has given me an immense amount of knowledge. Okay, it's just unbelievable. And when I start to see the accuracy of the system, I realize this is something special here. This is incredibly special. The accuracy is next to none. I've never seen anything more accurate when it comes to forecasting the markets and knowing when to stay out of the markets as well. And so that's what we engage in every single week in our classroom sessions, is taking this Sherlock analysis process, which is a way of analyzing the charts to extract information from it, and using it for our benefit, okay, to determine what price is going to do. So any questions? Let me know if you want to know or need to ask something. Let's take a look at, I'd like to take a break. It's 10:43. We basically covered the CoT report data that I wanted to cover, but I'll continue on looking at some other markets with you and examining the charts if you'd like. I'd be interested in that, but I would like to take a 15-minute break. It's 10:43 right now, and I wouldn't mind taking a 15-minute break, coming back at around 11 o'clock. Would you guys be down for that? If not, you guys can move and do your own thing. But if you are interested in doing some more analysis on the markets, I'll come back in 15 minutes. Sound good? All right. We'll see you guys in 15 minutes. All right. 11 o'clock. right, I'm back a little bit earlier. We're looking at Moderna. We got a nice drop on Moderna, didn't we? Take a look at that. That's a nice, decent drop here. What do you think this was caused by, right? We had institutional buying here, right here. Buying, 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 buying. This is the latest area where the banks are buying, right here. So profit taking, profit taking, profit taking, right down to areas of buying. So be interesting to see the news, right? What are they talking about on the news right now with Moderna? I know I was looking at some of the headlines recently, and they're all about, you know, Moderna's dropping in price, filing for expanded COVID-19 use for children, blah, 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 authorization. A lot of talk about it dropping, 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 just nothing but bad news, right? But this helped to drop price into areas of buying from the banks. So be curious to see now whether or not they're going to use this area to propel price back upwards. That is what we are suspecting, okay, is that we're going to see that. And we were looking at some options that were available to take advantage of this move to the upside. So I posted it in our Telegram channel. If you aren't in our Telegram channel, you should get there. There's a nice link that I made available that you can access. All you got to do is click here down at the bottom of our page here, and you can access our Telegram channel down there, okay? Take a look at that. I posted something there in regards to the options that are available to take advantage of this. Now, to really know whether or not they're going to use this area to buy, we are focusing our attention on this chart here, okay? So as you see, we have a structure to the downside here, right here. All right, this structure was used to facilitate the move down into the area of buying that we have here. Okay, this is where the banks, we know for a fact, were buying. So now it comes down to the decision of whether or not they're going to start buying again. All right, we can make assumptions, safe assumptions, but we can't know for sure. How we know for sure is if this downward structure that they created gets broken. If they break this downward structure and they start forming a structure to the upside, okay, then we know that they're going to start pushing upwards. Now, if I was trading options on this, what I would do is I would be waiting for the structure to shift to the upside, and then I would look into getting into the option. But I was very curious to see the option that I posted in our Telegram channel to see whether or not they were going to use this momentum from this buying area to start propelling price upwards. And if they do, this option that I had pointed out is going to do extremely well. Okay, I believe they are going to do that. Where is that option? Here it is. This is the one I was looking at here. Okay, Moderna, January 21, 2022, 350 call. Why 350? All right, so if we look at the chart here, what is this area here? Okay, that's the high right here. So if there's going to be a significant move to the upside, here is the likely place where they're going to be pushing price. Once it gets there, that is what we have to determine, whether they're going to use this area to drop price or if they're going to remove this area to propel price. Okay, so a safe bet is that price is going to get to at least there. All right, and that's why I was looking at that option there. the 350 call. And so at the time it was bid and ask 325 and 365. And when you look at the history of this call option, it was at $40. So whoever sold those options, they did quite well with the drop, right, of from the highs of price up here. So that is the one that we're looking at right now, because if this starts climbing upwards and starts doing this type of move that we suspect, that option is going to shoot like a rocket. It's going to become very strong. So I'd be interested to see what's going to happen there. So that's what we're watching, see if they are indeed going to do that. The other day we were looking at the stocks being purchased by Nancy Pelosi, because apparently this woman is just, you know, magically knowing all the right stocks to get into. Not sure how she knows that, but you can make your assumptions, right? So this one doesn't have much chart history. It just started back in June of 19, but it's been all upside since then, okay? And the last place where we had institutional buying was here. And you can see price dropped into it and they surpassed the highs here, which is a very good look for a continued move to the upside. All right, so this is one that we have our eyes on. We're going to monitor it and see what it is that they are going to do. PayPal is another one that she is invested in. And if you take a look at the monthly chart, we can see that we have an institutional area of buying right here. So you see how price has declined right into this area. So if we were a purchaser of PayPal, it would be in this area, okay? Not at the highs, because after it's made its move, you don't want to be getting into a position after they've already made their move. You want to wait until they take profits, bring price down into areas of buying, and then continue up like that. All right, so that is what's taking place now. And so I'd be focusing on this chart here, the daily chart. So if we take a look at the daily chart and we do something like this, okay, you see the structure, right? That is the structure right now. This is the structure that they formed to bring price down into that area of buying, right? So what I'm going to be focusing on now is to see if they create a structure like this. Because if they do, then we know that they're using that area of buying to facilitate a move to the upside. So once that gets created, then the likelihood of price continuing higher is extremely high. Okay, so that's what I'll be watching for. So PayPal looking pretty decent so far. And the SPYs, you know, all-time highs, which is great. But we also see here that there's potential for it to continue lower. Why is that? Because right now they seem to be attacking an area of buying that they have here on the 4-hour chart. And once they do that, we can no longer rely on this chart to propel price higher. So what chart will we be focusing our attention on? The daily chart, because the structure is still intact here. Okay, so we'll wait to see that. So once they give us the signal that this 4-hour chart is no longer valid in terms of holding price up, then the likelihood of a drop in price is bigger. And so we can use this information to help us to determine what is likely going to take place with the other stocks. Because the market is very heavy, it tends to bring heaviness to other stocks depending on those individual circumstances. But overall, the general rule of thumb is if the market is weak, all other stocks will likely be weak. So we could use that to determine, and you can see this weakness here, and you see PayPal really taking advantage of that weakness in the market and using it to drop price. All right, Netflix, so Tesla was the one that was really, really good. So Tesla, okay, remember we were looking at options on Tesla. Huge, huge move from $1 to $90. All right. And it's because when we were examining this weekly chart, we knew at this location here that price was going to move up. How high? We didn't know how high it was going to go, but we know the signals to exit when being in the position. All right. And there was a signal up here. So let me show you what that signal was. So we have this 4-hour chart here. And I want you to look at something here, all right? We have an area of institutional buying right here, okay? Now, if they were going to continue this strong momentum to the upside, they would use this institutional area to facilitate a move higher. The second they take out that area, that's the signal to exit. All right? You see how early that signal was produced? Okay? At the 1150s. The signal to exit was at 1150. Okay? By looking at the charts, we know you're in a long call option, then you exit when price hits the 1150 mark. And now we're out. You're out early before the bigger drop. All right? So you know how they say you can never time tops, this and that? No, that's not true. You can, and we do it all the time. You just need to know what to look for. And so the system that we teach, the concepts and principles can be applied to anything with candlesticks. It's all the same. But you see how we get out early before the big momentum comes in, okay? We get out early, and then it's not until after a move like this where people are like, oh, what's going on here? Are they taking profits? Yeah, we knew that at 1150, okay? Price reached what? 1040s. At 1150, we already knew. Okay, so that's the power of what it is that we're doing here, because you can get out of a position early. So now, just like I was explaining, we can no longer rely on this chart for direction. So the next chart we look at is the daily chart. Okay, and if the daily chart shows us that it's not going to be reliable, guess what's the next chart we will be focusing on? The weekly chart. Okay. So right now we're watching the daily chart, and it's very likely that it can continue even lower, but we don't know for a fact yet, so we'll be watching it. But very interesting to see how this stuff plays out. NVIDIA gapped up and then is dropping down to demand, okay, and going back upwards. Netflix has retraced. Signal to exit was higher up here again, right there, above $670, and then it drops almost 640. Okay, the structure on the daily chart is not good. All right, it cannot be relied upon. What we would be focusing on now is the weekly chart, and look what we have right here. It's an area of institutional buying that we located. Okay, so we could see price drop down a little bit further and then institutional buying come back into the market. So that's something that we are watching for as well. BlackRock, big corporation, BlackRock. If you research BlackRock, they are involved in a lot of stuff. Okay, they are involved in a lot of stuff, a lot of big investments. They are a huge corporation with a lot of big money invested. They push a lot of agendas. They invest in a lot of stuff. So This is a stock that I like to track because it will give us a lot of information. Berkshire Hathaway's another one. Okay, we all know Berkshire Hathaway. If you actually look at Berkshire Hathaway's original stock, look what the value of it is, $431,000. Who do you think owns stock in a company which the shares go for $431,000? Not me or you, right? So, you know, that's big players only allowed to be involved with them until they came out with this other stock at a lesser amount. I don't know too much about why they came out with this one, and it looks like 1997. We have history. I don't know if it's been around since 1997. If you guys know, let me know, but I'm not too sure. Okay, but do these stocks respond to supply and demand? 100%. Okay, 100% they do. Okay, as you can see here, price comes down into institutional areas of buying, and then away she goes, right? This is why I say you don't buy when price is at the highs. Those are the wrong places, because when they take profits and price goes against you, you don't know how far down it's going to go until you see the buying taking place, and then away she goes, right? That's why we wait for chart signals, okay? And that drop in price, let's take a look here. That big drop in price happened here, down to institutional areas of buying. At that point, we would be locating institutional supply areas in this region, and the signal to get in is when those institutional supply areas are removed. That's what we'd be looking for. Once they're taken out, then we know price is going to go higher, just like that. All right, so it's pretty self-explanatory. Like I said, they're very different concepts than what most people are used to. So it does take it does take some time to get to understand what it is that we're doing and how we're doing it. So you got to be patient, and you got to just go with the flow and learn things slowly. You may add State Street to your list, Kev. They're as big as BlackRock and Vanguard. State Street. That one I hadn't heard of. State Street. Interesting. Yeah, okay, I'll add it to the list and track it. How soon do you think the school will really get into options? Well, if you're an options trader now, I mean, the information that we've provided is just ridiculous. I mean, remember this chart here, the SPY. We were saying that, right, it was around here somewhere, I think, that these areas are likely going to be removed and price is going to go higher. So if you're already into options, it would have been a great opportunity right there. But if you're new to options and you want to learn, we're slowly getting into it. Okay, we're slowly getting into it. Give me some time, because you know I did take options. I learned it. I took several notes, and you know it's very powerful stuff. I just gravitated to trading the currency markets, because the currency markets, they were just so easy to read. You know, so easy to read. There was no manipulation in terms of companies' agendas and balance sheets and all that stuff being manipulated to move price. But at the same time, throughout the years, my experience has taught me that there's a lot of great opportunities too in the markets. So I want to take advantage of those moves using options, but I'm just going through all my notes again, relearning it. I don't want to teach something that I don't know, that I don't have a full grasp of. You know, I have basic knowledge of options and how they work and so forth, but I really want to make sure that I know what I'm talking about before I start talking about it. So I've shared some stuff that I do know, and we are slowly getting more comfortable with the concept of options, but I still do want to learn a little bit more about them. What else we got here? The Bitcoin ETF has been performing not too bad, right? We had a lot of up and downs here for a few weeks. Now it's starting to gap up a little bit higher. Why? Because Bitcoin's making all-time highs, so no surprise there. But the markets are looking really good. Just a little bit of profit taking place. You know, we can see them in the markets and we can see them in the stocks, some profit taking, all right? So we'll continue to monitor it and see what they're going to do with price. On the daily chart, we got a nice institutional area buying here. So does price come down here and start heading higher, or does it come lower before heading higher? That's what we're watching for. Okay, that's what it comes down to at this point. Yeah, Vanguard is big. Vanguard, I know, is huge. Vanguard, I believe, is heavily invested in BlackRock, or maybe like even owns vast majority of shares of BlackRock. That's kind of what I've been hearing. But Vanguard is like if you took some of the richest people in the world and took their money and invested it in a company, and these richest people in the world had agendas for the future of the economies, and they need to invest in certain technologies to advance their agendas. Vanguard is the company. Vanguard, BlackRock is the company. Okay. Apple stock, so we can see that, you know, it rallied up. There's some supply up here, so we have to wait until that area of supply gets removed, and then likely more upside from there. All right, good overview of the stocks. I think we got all-time highs right on Bitcoin. We can take a look at that. Yeah, some all-time highs there, and then starting to retrace again. So as I was mentioning to students yesterday, you know, we have targets of 100,000 on this one. We have a nice institutional area of buying here. This is the last area where the banks were doing substantial buying, big investors right here. So we could see price drop here, and if that happens, that would be an excellent area of investing. Okay, we would wait for the chart signal to be produced that indeed the institutions want to use this area for buying. Okay, look at the last area that was contacted. This is the last area that we had located as where the big investors would be investing in Bitcoin. And we had that drawn out when price was up here. Okay, and down, hit our target. Look what happened when it hit our target. Profit taking. Okay, how incredible is that? We located the entry and the target to exit out of positions before it even got close to those areas. And it played out exactly. Okay, after the profit taking, look what they did. They created a new area of buying, and now price is at all-time highs. Would I be buying there? Absolutely not. Right? Just like the other stocks and charts that we were looking at, you don't want to buy at the highs. That's a big no-no. So you wait for them to create institutional areas of buying. Once they create those areas, then you know exactly where to be entering it. So that's what I would be doing. Okay. That's what's going on with Bitcoin. All right, so that's pretty much it. I think that's a good starting point. You know, we had CAD yen that we're watching for. There was a potential signal that could have been produced up here, but was not produced. Okay. We had a little bit of price action that was about to produce a signal. It failed to produce it. And based on that, we knew it was likely not going to hold this area. And so what happened? It took out the area. And so what does that signal? That signals that very likely we're going to see a drop in price. Okay. And when it gets down to this area, we're likely going to see a move up, but we'll be waiting for those trade signals to be produced again. That's it. It's pretty much straightforward, you know, just waiting for the charts to produce signals. When they produce signals, we enter. All right, if you have any questions, can you show Russell E-mini futures contract chart? Russell, yeah, we got the Russell. All-time highs, just breaking out of some congestion that we had there. Interesting here, if you look at the 3-month chart, okay, all that congestion here was this here, right? So with this push to the upside, it looks like this may be a huge area of buying. We don't know for a fact, but you know, when you look at the chart, we could see something like this. Okay. And then what will happen is this will be the institutional area of buying. They have a trend line up here, and then they could drop price up, down like that, and then that will just fuel a move even higher, like that. All right. Ethereum. All right, I look at that one too. That one was pretty strong, wasn't it? Yeah. Very strong. Look at the institutional areas of buying that were used to facilitate that move up. Look right here. Institutional area buying, boom. Institutional area buying created, boom. And away she goes. Okay? That's how it works. That's how it works. So now you got to just wait and see what happens. Are they going to consolidate price at the highs and then eventually drop it? You know, that's possible. Or are they going to just continue pushing higher? So I wouldn't be buying at these highs. I'd only be buying at institutional areas of demand. And those have already been contacted and price has already left. The ship has sailed. So not a good time. All right, if you like this session, hit the like button. If you're new here, make sure you subscribe so that you get notifications when we get new live sessions. And that's it. I'll leave you with that. Thanks for joining me today. It was fun. And it's 11:20. We went on for quite some time. And if you have more questions, just visit us at www.whiteoakfx.com and surf through the website. There's a lot of good information there for you. All right, enjoy the rest of your day, ladies and gents. Thanks for joining me today, and we'll talk to you soon. Have a good one.